Good morning to everybody and to Afore Consulting and Discussion with. This morning I'm absolutely delighted. It seems to be our payments week, by the way, Maria. We've had various payments events all week, and it's kind of a perfect ending to this week to have a conversation with you to bring in DG competition. I know you're extremely busy, and we talked before, and extremely busy to respond to COVID. And congratulations to you and everybody in DG Com for all the hard work you've done since March in helping us on the state aid side. But today we want to talk a little bit more about payments and the impact of technology on payments. And I think for the participants to know, we will have a bit of a discussion, but do please bring in questions through the Q&A function, and we will come to those. Either I build them into the conversation where it makes sense, or we come to them towards the end. So please do ask questions. But with that, Maria, it's a great pleasure to have you with us. You've been in DG Com for a few years, but you're no stranger either to financial services and many other issues, including helping us through the financial crisis and the economic crisis in Greece. Maybe I start, do you want to kind of say a few words on how you see the link between or the impact of new technologies on the payment sector and what that means for DG Com's work?
Thank you, Nicholas, and good morning, everybody. I'm very pleased to participate at this webinar. So how I see the role of new technologies? Well, I have to say it's an increasing trend which has been accelerated through the COVID crisis. All of us, we have been increasingly using cashless and contactless payments. For instance, contactless payments. We use much more our digital wallets, and also we try to privilege online payments and electronic shopping. So all this was there before, but of course it's increasing with COVID exponentially. More broadly, digital innovation is a business opportunity, and we see that a lot in our activity when it comes to mergers. So banks, we see mergers between banks and fintechs or big techs acquiring smaller companies. And from a competition perspective, we see it as a real business opportunity. We see it also as an opportunity for consumers to get the best out of business combinations, provided this is done under competitive terms. So for us, this is good. Nevertheless, here that brings me to what is our role in here. We have to stay very vigilant that all this happens in fair market conditions, and we try to do this both through enforcement and advocacy, but also contributing to legislation. I have to say that competition issues we see through our case practice can be grouped into two main categories in payment services. The first one relates to access to data. The second one relates to platforms. When we refer to data, that covers both access to sector-specific data, and then you have all the data in the payment sector, for which access has been given through the Payment Services Directive. Also, you have similar discussions going on in the context of the MiFID revision. But the most interesting and juicy part, I would say, of the debate is access to big data, personal data, which big techs possess, like Facebook, for example, or Amazon. So this is the kind of discussion we have, and there the debate focuses on access. So whether the conditions for granting access is fair, reasonable, and non-discriminatory. but also on further conditions. For example, access should not be delayed. So this is another set of concerns. But beyond that, of course, data issues emerge in the context of cooperation of big techs and incumbents with innovative fintechs or through acquisition of fintechs. So this is a broad debate which has lots of faces. This brings me also to the second leg of concerns, which is the role of platforms. And platforms, of course, can abuse a dominant position in the context of data access granting and the conditions which are related to that. But also in general, through leveraging their dominant positions, through network effects, through the capacity to also expand, for example, from the payments market or their traditional business to adjacent markets. How we deal with this? As I mentioned before, we have the competition tools. You read from now and then on heavy competition fines. We also do a lot of advocacy. We try to support if we are consulted with advice. We contribute to legislation. But also recently, I'm sure you have seen the whole discussion on trying to enhance and innovate in our enforcement capacity with the discussion on the new competition tool. So there, in a nutshell, we are trying to accelerate the pace of antitrust enforcement. We try to look into markets which present structural problems like very monopolistic markets, strong lock-in effects, and the interest of that would be to explore possibilities to cooperate with industry and impose remedies without having to establish an infringement and have the traditional type of enforcement. So this is not new. This is something which has been inspired by the practices of the UK Competition Authority and is also used in the context of network industries. So this is a potential for enhancing our competition powers. And the second leg of this discussion concerns the preparation of ex-ante rules, which would target large platforms which act as gatekeepers. The idea there is to establish a list of do's and don'ts, which the platforms should not engage in. So this is an ongoing debate to enhance the tool set of our powers. And one last thought before we embark in the discussion. All this is not disconnected from broader considerations, and which is about European financial sovereignty and also promoting pan-European payment schemes. In general, the Commission, including the DG Competition, is very much welcoming of a pan-European scheme and solution for instant payments, in particular if its main feature will be the innovative SEPA instant credit transfer scheme. Also, this links to our broader discussions on the retail payment strategy, which was adopted in September. But first and foremost, on the role on the whole debate of enhancing the role of the euro and make it a really dominant currency in the international scene. We have been also accompanying the process on the European Payments Initiative. There, as I mentioned before, we have been providing advice, not punishing ex post. You can imagine that for such a big project, there are lots of issues of governance which need to be sorted out so that the project is open to as many participants as possible, and ideally get a really European dimension, also to third-party providers. There are issues of standardization. There we have to make sure that the process is fair. Cooperation, exchange of information, as you may be aware, exchange of confidential information can be very tricky in competition terms, and also the cost models, because for the parts which are card-based, there needs to be compliance with the interchange fee regulation, but also the fees which are outside this regulation, they need to be proportionate and competition enhancing. Last but not least, we are also very adamant in facilitating interoperability, and we very much support access to payment infrastructures. So again, we have been in very good terms and collaborative mood with the European Central Bank on tips and target instant payment settlement. Yeah, so I'm looking forward to your questions and have a very interesting debate.
Thank you very much indeed, Maria, for this very good overview. Maybe let me start with the first point you talked about, which is data. I mean, data is becoming an increasingly important issue. Some call it, the new oil of the economy or whatever. There are these different phrases, but there are different work streams on data in the Commission at the moment. There's the EU data strategy. We see in the, as you say, the retail payments roadmap, but also the digital finance action plan talk about open finance, so moving to a broader access to information of bank accounts, and data pops up everywhere in sustainable finance and all the different debates. How does DG Comp interact with these other work streams? As you say, you might get involved in different regulatory or legislative initiatives. So I'd just be interested to see what type of cooperation exists there between the different DGs.
First of all, I would still comment on the leg of cooperation in terms of regulation, because competition is not an objective which is standalone. It has very much to fit in the broader setting of objectives, call it stability, call it transparency, call it fairness. So definitely there we are discussing constantly with other DGs in order to make sure that competition concerns are embedded at the outset of regulation, even if we don't propose to other DGs to codify our practices, which can also be the case. Then when it comes to the particular issues which you have mentioned, we have to distinguish compliance with regulation, which has a limited perimeter. So, and everything which is outside the limited perimeter of regulation. And then I have lots of examples of enforcement which go beyond the perimeter of regulation. For example, a few years ago, we had launched enforcement in the e-payment market before the entry into force of PSD2, which at the end settled a series of issues. And the reason for that was access mainly to a series of bank accounts, which precisely was not covered by the Payment Services Directive. And beyond that, there are further structural or behavioral issues which are not regulation specific, which are relating to market conduct basically, and which can only be controlled and enforced through competition tools. Hence, the whole debate precisely in addition to regulation to enhance further the tools we have for our enforcement through remedies, even in markets where we don't see an infringement. Also, you have to bear in mind that legislation also takes a lot of time, and it's a product of consensus. So very often, certain things cannot be regulated if there is no consensus. So the only tool, and the quite powerful tool, I have to say, is competition enforcement.
Thank you very much. Maybe a follow-up question, and I take your point maybe more as a comment. I've seen, for example, also in you're thinking about the review of the merger regulation, and part of that is also the role of data in defining market dominance and market role. The ability of companies to act or how can I say, potentially abuse dominance in markets. So it's interesting how data becomes also a factor there. But coming back to the Payment Services Directive, because you mentioned it, we had a very interesting discussion on this yesterday, which is kind of access to bank account data through APIs. And I know progress is being made through the PSD on that. But if that access remains potentially suboptimal because of the way it's being implemented operationally by individual banks, or if there are other complaints, what role do you foresee for DG Comp in that specific area, potentially?
So there, as you're well aware, there is a set of basic rules in the Payment Services Directive. You also have the regulatory standards. And then in the context of APIs, banks basically are allowed to set up these dedicated interfaces. So this is mainly an issue of controlling application and implementation of the Payment Services Directive and the regulatory standards. There are lots of issues of interpretation there. So the first port of call, I would say, are the dedicated supervisors in that field. Nevertheless, where potentially DG competition could come in is if the procedure for establishing these interfaces was done in a collaborative manner by a number of banks, which could potentially lead to concerted practices or even to a dominant position. So while there is an aspect of interpretation and compliance with the regulation itself, definitely cooperation among banks would be an issue we would be looking at.
Maybe I move over to platforms for now, because you mentioned already we're all very excited in process about this potential ex-ante tool that's going to be introduced in parallel to the Digital Services Act. And you already alluded to the fact that in the UK and in certain network industries, this is not so new. But within European competition law, it is a new element as far as I can see, or from my knowledge anyway. And departs a bit from the common practices that we know. I guess in developing this, you've already said that there would be some do's and don'ts that you would consider as part of that. But I guess one question is, how will you frame that power? What type of principles might you want to include? I know you're still drafting the legislation, working on the legislation, but I guess there needs to be some due process around this and some way of measuring ex ante such impact, because potentially otherwise it could give DG Comp incredible power. So how do you think about measuring these do's and don'ts when a company is kind of on the verge of potentially entering this space where the ex ante tool might become relevant?
Let me start from the very beginning, because here we are discussing two different and complementary things. One leg of this initiative is the new competition tool. There, this is a potential avenue for enhancing the enforcement powers of the European Commission. So the difference with the current set of powers is that there we would be discussing remedies, imposing remedies in markets where we have established some structural problems, but without establishing an infringement. So this is an enhancement of competition enforcement. The second aspect, which to my understanding you are referring to, is a legislative act which will regulate ex ante a series of practices of do's and don'ts. The whole reflection around it at this point in time, because this is something which is still open, is to have, let's say, a series of behaviors which can be clearly prohibited, all this subject to self-assessment, and from known practice, I would say, to, let's say, ban a series of practices like self-preferencing or let's say acceptance of supplementary commercial conditions that by their nature have not connection with the underlying contractual relationship. So all these will be embedded in legislation. This, of course, will be subject to the due regulatory process. There will be an impact assessment. It's a Commission proposal. It has to be adopted through co-legislation. And then such a legislative proposal, of course, would not be one size fits all. There we have to define what kind of platforms we are talking about. There need to be some criteria, for example, in order to define their tipping potential, some criteria like customer base. We need to define what kind of services we're talking about. At this point in time, I don't know whether payment services would be covered like this. So there is definitely, there is the same level of legitimacy you have when you embed previous case practice in a piece of legislation. When we go back, for example, to existing legislation in financial services, a number of codified practices you can find are the interchange fee regulation itself, in MiFID, for instance, in EMIR, but also in credit rating agencies, you have embedded in legislation a series of issues which were detected through competition enforcement, which did not necessarily lead to imposition of fines or enforcement decision, but nevertheless tried to remedy to a problem in the market. So this is the underlying logic of such an act. So in a nutshell, this package entails enhancing the competition enforcement toolkit, but also a legislative act which follows the pattern of previous pieces of legislation where you can see the interaction between competition enforcement and its input to traditional regulation.
So this is interesting, I think, because I hadn't fully appreciated this, that effectively, as you say, there are two legs to this. There's the very specific legislative proposal, which is, I understand, primarily focused at platforms because it kind of sits next to the single Digital Services Act, so Digital Markets Act. And then separately, though, DG Comp has that tool, that ability in markets which are monopolistic in structure or have structural deficiencies to already propose remedies. So that sits and could be applied, if I understand correctly, to much, or has to be applied to a much broader set of sectors, not just the platform industry, but the entire economy where you might see those type of elements emerging. Maybe you can just clarify that, but I've understood that correctly. But because I did think, and you're right, I looked at this more from the legislative tool, and that's a question of scope, because even though it might be directed at platforms, we see, for example, in the payment sector or in other financial services sectors, network effects as well. And so the question is whether or not such legislation or your other separate tools that you've just referred to could be applied in such cases. We have had the question come in, for example, in card schemes. If card schemes are deemed to become dominant, or if you feel that, as you say, and a platform operator isn't yet entering a market but might be entering the financial services market, a case like Libra, for example. Maybe you could just say a few words, just whether I've understood it correctly, and also maybe applying what you've just said a bit more to the financial services sector without, of course, mentioning any specific cases or sectors, but just to understand a little bit how this might be applied in the financial services sector potentially.
As I said, for the time being, all this is under discussion, so I cannot give you a precise idea of what is going to be covered. I know it's quite complex to explain, but let's say there will be a legislative act or two legislative acts. Okay, let's make it very simple. So in this legislative act, one leg would be enhancing the powers of the European Commission. So this is the discussion around it. So this is the new competition tool, where precisely when we will need to define which markets we are talking about when we talk about markets with structural problems, and then we need to refine what does it mean discussing and imposing remedies. So this is the one leg. You need to have a piece of legislation to create these new powers. And then the second leg, which will also be in legislation, is something which is a little bit closer from our experience to what we know before. As I said, regulating certain behaviors, certain practices, to put it like this. Of course, it's not banking or insurance regulation where you impose licensing subject to conditions. Here there would be identification of certain platforms, certain services, a series of criteria in order to do that. And there you would go into the list of black or white or, I don't know, potentially gray practices. So all this is being discussed. Now, your question was beyond platforms, where basically you talk about dominant schemes. As I said, in this point in time, I don't know where the discussion will end up. It was not covered by the initial thinking. I agree with you that issues at the end from a competition perspective may be the same. So either you can cover them in legislation, either in this legislation which is about to be issued, or potentially in the future in another piece of legislation, or we will continue having traditional competition enforcement. As I said before, precisely you should see the iteration between regulation as and competition enforcement as something very fluent and two channels which feed each other. So they are very much complementary. So legislation, as I said, cannot cure everything. It takes a lot of time, has a limited perimeter, but if legislation is not there to ban or clearly allow a specific behavior, then you have the set of tools of the competition enforcement, including, if it goes ahead, of course, the new competition tool.
Thank you. It won't surprise you that loads of questions are coming in, and I'll come to them in a moment. And if others still have questions, please bring them in. I try and read them in parallel, but there are quite a few coming in, so I'm multitasking as much as I can. But before we do so, I just want to come back to the European Payments Initiative, on which you finished your kind of earlier intervention, which is, we know, as you say in antitrust, that you can't provide comfort letters. The idea of comfort letters was dropped in the early 2000s, and now there's a self-assessment process. Nonetheless, you say that you're kind of given, I'm not quite sure which term you use, but you're following the process very closely. You're engaged with the parties involved, given the investments. So what shape does this engagement take? To what extent can you give some form of comfort without giving comfort, so to speak, for these investments to be made?
Well, this collaboration takes the form of pure advice. Let's take it the other way around. If we didn't have this collaboration, which is not a traditional DG competition role, this big investment would have to take place without knowing what we think. So the EPI would take a risk of doing something which is not conform, and we would come in potentially on the basis of a complaint in order to sanction it. This is something we wanted to avoid in this case. So we exceeded our traditional role, and we started an iterative process which in order to help industry to shape the project in a way which minimizes competition risks. So this is the kind of iteration we had with them. So this is also the approach of Commissioner Versteyer for such an important endeavor, which is very much supportive of broader policy objectives. It would be a pity that we simply watch and come in if there is a complaint later on. So we took a proactive role, which is not our traditional role.
But it's interesting because I think you've opened procedurally the opportunity there in the future, if we were to see this in other sectors, to do something similar. But I take your point. I think maybe one question that's come in on the EPI is around access issues and the impact of EPI on competition in general. Maybe two parts. One is access. Not everybody will be part of the EPI at the beginning. We will build this new set of rails. How do we ensure that other banks, non-banks, other parties that want to participate or use those rails in the future will have non-discriminatory access, or also become involved in the process early on to at least be consulted or informed to be able to plan products and services on the back of these rails, to not give a let's say, first mover advantage to certain players. And linked to that, a question came in as to whether the EPI in itself crowds out potential competition of other types of payment services that might be evolving in the market at the moment.
Both those elements are looking into. I will start with the first one. Let's be very pragmatic here. We perfectly understand that this is an investment. So in an ideal world, we would like to have everybody being able to participate from the very beginning and the 27 member states being covered. Being realistic, we all know that certain business choices need to be made. And of course, there is an investment by the founding members which needs to be made. So this is the starting point. How can we ensure that after that, access is unfettered? There, as I said in the beginning of my intervention, we have been discussing precisely with the API and open and inclusive governance model. We have been discussing, for example, potentially licensing arrangements for payment service providers. So basically, you can have a quite fair and good picture of how the operation can look like in the future once the project is stable, and also whether there is a potential for it to expand further to the founding members. So there I would say it's a traditional competition assessment of access conditions, licensing conditions. So then you said whether the EPI crowds other business models. For the time being, I have not seen such an issue, I have to say. On the contrary, if there is an emergence of an inclusive pan-European scheme that could favor competition, for instance, in instant payments, as we all know, there is a part which is card-based, which is also beneficial because it competes with other international schemes when it comes to instant payments, provided that everybody is able to join. And then once the scheme operates, they are not infringing competition in the markets. We don't have an a priori that there is a problem. Up to now, we have not been approached by anybody who complains that this would prohibit competition from other schemes. So if there is such information, I'm very happy to look at it.
Thank you. Maria, can we keep you 5 minutes longer until 1:45? Because I've got lots of questions here. I think there's 2 more on payments, and then I come back maybe to 1 or 2 of the other things you raised, or slightly broader issues. One just came in from Jean-Alix of BEOC, which I think is very interesting because it's linked directly to EPIs. And he makes the point that if an EPI offers a number of different services, so instant payments and cards, and maybe in the future something related to the digital euro, how, and I've used his phrase, how does that contribute to competition between cards and other means of payments? Because we're just replicating then all these different means of payments operated through one operator. In the same way that you could say many of the card schemes are currently both providing cards, but are also going into account-based payment solutions. So where's the competition there?
I'm not sure I understand the question because,
So
as I mentioned before,
one of the aims you've always had is to create competition to card payments, and card schemes, to kind of have alternatives in the market. But if the European Payments Initiative offers, again, both a card solution and an account-based solution, in a way how can I put it, you don't create competition between cards and account-based payments with each other, because both are again being operated by the same providers, in this case the EPI.
First of all, the EPI is not intending to only provide card payment solutions. It also provides instant payments. And this is something which is important, and which is something that I think we all support in the Commission. Now, if it provides various services, let's say card-based payments, instant payments, other types of payments, we have to see the merits of competition in the various markets it operates. Then I suppose the question of Jean-Alix refers to a potential monopolistic position the EPI would get if it expands to various markets, from card-based to instant to other types of electronic payments. Well, thinking loudly, this relates to the issue you raised before, that beyond platforms, you may have other schemes which use networking effects, which expand in adjacent markets. So there, yes, theoretically, there might be a problem. But I think it's too early to say that we will have a problem if the API expands to offer lots of services. I would say the other way around. We need to be very vigilant that first the creation, then any potential expansion, precisely it takes place in a way that efficiencies are created and competition is not hampered. So in a way, it's also in our radar, and this is something we will need to be looking at. But we would not stop a European player from entering the market because potentially in the future, if it becomes too big, then that might create a problem.
Understood, yes. Let's cross that bridge when we're there. We haven't even got the European Payments Initiative yet. Let's give them a chance to kind of develop first. I've got 2 more questions on payments, and then I want to come to 1 or 2 other issues. I'm conscious of time, but on payments, I think an important question that came in from Peter Robinson in the UK, which is on the IFR, you've got the conference in early December on the interchange fee regulation. His question is very specific on the acquiring market, because the UK has been investigating and looking into the acquiring market. And but I think maybe I'll make it a bit broader, which is kind of, I think for now the decision has been taken not to immediately revise the IFR, but it's not quite off the table yet either. And I think the intermediate report conclude further work needs to be done on certain areas, including acquiring. So how do you see the work on the IFR progressing over the next year or two, or the next few years?
So I would say, as you saw, beyond the report, or to put it the other way around, the report was based on a very comprehensive study we commanded. So we looked very deeply into the nitty-gritties of the markets, and I think there were numerous revision clauses in this regulation. While it gave us enough material for monitoring and thought, it didn't provide us with evidence to revise the regulation. So definitely, from now on, we will be looking into the markets. The IFR hearing is a hearing which covers the interchange fee regulation, but not only the regulation, but all related issues from the payment sphere, which could have a bearing on the regulation. So what we will be doing is collecting intelligence on the application of the regulation, monitoring market developments, and potentially see whether at some point in time there is enough material to open a discussion on this regulation, or even expand and cover other things. So in a nutshell, this is an open monitoring process and an open debate. But as we all know, we will not open a piece of legislation just for one issue, or if there is no real harm, because the danger of destabilizing markets is bigger than trying to fix one leg or the other. So definitely I don't have a timeline for revising the regulation. And I have to say, the other way around, my experience with the regulation and the plea from market participants is stop adjusting regulation constantly. We need to have transparency, we need stability. So I would say for a few years, it would be better that we take a thorough stock, and then we start discussing what we modify and in which direction.
Thank you. I think you are very smart, but I think that's very smart because since the first IFR, or the IFR, there's only one, the payments market has evolved so much that kind of, I think it is a very sensible approach. And I take your point about legal certainty and continuity might not be the best for our industry, who advises companies on regulatory change, but to be honest, regulatory change in itself is not always the best thing for continuity. I end maybe on a box of different suites, because it's 3 different issues, and I leave it to you to see how you want to respond to them. They're not in payments. I think the first one came from Jack of Politico, an important question, which is the state aid communication, the banking state aid communication. We've had many workshops here in this forum on the revisions to the BRRD, NPLs, where we go from here. But we always in each discussion end up talking about the DG Comp communication, which was very important, but the question is how it interrelates with the BRD. So whether or not there should be some review at some stage of that communication. The second question is, it's on Brexit, but not Brexit per se, because I know you couldn't comment on that, but it is more about the future cooperation and alignment of competition practices between the UK and the EU. Where do you see that going? That will no longer be part of the ECN, just to the extent that you can say anything. And the final question was really more on securities markets, and you touched on this already when you talked about MiFID and the whole question of data, that it isn't just in payments, it's equal in securities markets. But it's more whether and to what extent you're following the work being done by ESMA at the moment around market data in advance of a possible MiFID revision, well, not possible, in advance of the MiFID revision on market structure towards the end of next year.
Okay, I will try to be brief. Not only on the first point that you can imagine, I can talk for days and weeks. But in a nutshell, of course, there have been discussions on the revision of the banking communication, as there have been discussions on the application of the BRD, as there have been discussions on whether the banking union framework is fit for purpose, and so on and so forth. I have to say that we also have to take one step back and look at the reality outside the banking system. So these days we are not facing only a health crisis, we are facing a heavy economic crisis. And while data on the banking sector are still relatively solid, we have to take into consideration the heavy injections from public budgets for right reasons in order to keep the real economy afloat. So hopefully these measures from public budgets will help containing to a large extent the crisis in the real economy before it reaches the banking sector. So before jumping on revising some old issues related to bail-in versus bail-out, we need to take a very careful look on what will be the effects on the banking sector of this crisis. So this is in a way of introduction. And then we have to see on the broader picture whether adjustments in the banking union framework are needed. You saw in the summer some quick adjustments were made by my colleagues in DG FISMA. We may need to discuss whether, for example, we need adjustments on deposit guarantee schemes or the BRD. And there, indeed, we have to see how the state aid rules would fit into all that. You may also be aware that the European Court of Auditors has recommended an evaluation of the state aid rules for 2023. We have to see whether this deadline should be kept or we should advance. But in order to avoid, let's say, the sins of the past, where state aid rules were adopted and then the BRD was adopted, we should try and have a holistic view of all the issues and see how all the bits and pieces fit well together in the puzzle. When it comes to Brexit, in very brief terms, the UK will be a third country jurisdiction. So our enforcement powers also extend to UK companies to the extent that the effects are felt on the European market. When it comes to further cooperation, I can simply say today that we have cooperation with third countries, and there are various kinds of agreements and the graduation of possibilities of collaboration. So this needs to be shaped in the near future. Potential specific concerns which would apply in such a context is what's happening with state aid, because state aid control is a quite unique self-containing mechanism in the European Union. What is going to be the stance of the UK? This is something which needs to be looked at. And then you mentioned securities markets and the work of ESMA and the MiFID revision. Luckily, DG Comp and my directorate do not have to do everything, in the sense that my colleagues in DG FISMA work hand in hand with ESMA, and all the work of ESMA is really take into consideration, and vice versa in the MiFID revision. Of course, we work very closely with the DG FISMA colleagues, not specifically on ESMA, but for example, if we have an investigation or if we have a merger case, we will definitely look whether regulation has a bearing. Having said this, proposals for regulation, as you know, take very long. So, and you mentioned the MiFID revision. I would not judge a case, an antitrust case, a merger case, with the data of today, with the legislative framework of today, on the basis of possible speculation how a potential revision of the MiFID could go, because for the time being, we don't even have a proposal. So definitely we interact. If there is legislation in the making, if there are actions by ESMA, we take them, of course, into consideration and we talk to them as well. But we are not the ones who are regulating capital markets. We complement each other, as I said before.
Thank you very much indeed, Maria. It's funny that we ended up talking about MiFID again, because many years ago we talked about MiFID when you were in charge of MiFID, but Tilman has that steadily in hand now. With that, a big, big thank you, A, for taking so much time and being so open and frank. And it's, I think, always good to understand what DG Comp is doing in the broader context. And so it's a great pleasure. Maybe I can do this again in a year's time or 2 years' time. I know we did this in physical meetings in the past, but it's been an absolute pleasure, and the attendance has been extremely high, and sorry for those who I couldn't kind of bring in with their questions because there were so many, but that shows just the genuine interest in the work that you're doing, Maria. Thank you so much. Good luck with continuing shipping us through this crisis, and a lovely weekend. Thank you so much indeed. Thank you.
Thank you very much. It was a great pleasure.